Welcome back to the Market Mentor Ventures channel. My name is Dahuda Hunter, and today is actually August 9th, 2025. We're through the first week of August. We're definitely going to recap what happened in July. I know we had the jobs report in that last week of July that definitely shook up the market leading into this first week that we are just getting through. So we're going to cover that. We're going to cover the historical context behind August and what to expect, what history has shown us. We're going to talk about the Fear and Greed Index, where we currently stand with that. And then we're also going to touch on a few things that I have on my watch list for this month as well. So without further ado, let's get into the disclaimer and get into this breakdown. This content is presented to be used and must be used for informational purposes only. It's important to do your own research before making any investment decision based on your own personal circumstances. You should take independent financial advice from a professional or independently research and verify what you hear on this channel. All right, so let's get into it. Last month, this is what we talked about. We said July is the best month of quarter three historically, and especially in post-election years, which we currently are in. Start of the second half of the year brings an inflow of retirement funds. Mid to late July tends to be the most volatile, which we did see, and July starts the worst 4 months for the NASDAQ. And attached here, I did screenshot the seasonality chart from bar chart. We see here with QQQ how we closed July, 2.42%. And then we look over to the right, we see on SPY, we closed out July at 2.3%. So definitely positive month for both indices. And we had a lot of earnings that blew it out the park, and we saw great gains in those companies, i.e. Microsoft, i.e. Meta. But we also had companies who did great on their earnings on the top and bottom, but their price still pulled back related to guidance issues. So we saw that for AMD, they beat, but their price had a significant drawback. We saw the same thing with Amazon as well, just a few companies to mention. And like I said, I'm going to cover one company that I'm currently looking at and had a significant pullback to a critical area of support. First off, what is history saying about August? Based off the Trader's Almanac, these are the 3 insights that I pulled from it for this month. Data suggests strongly that August is a challenging month for the major indices. It's often referred to as a part of the summer doldrums, or in other words, it's just flat or underperforming. Performance ranked since 1988, August has been the worst performing month for the Dow Jones and the second worst for the S&P 500 and the NASDAQ. And here below we list some average monthly changes amongst those indices, and we see here in the Russell 1000, which is the large caps, and 2000 being the small caps, 0.3% and 0.2% respectively. While August is weak on average, its performance can be viewed through the lens of the 4-year cycle. So since 2025 is a post-election year, the historical pattern can be different from the general average. And what does that mean? This means, while Q3, the entire quarter, post-election performance, August falls within that quarter, but Q3 has historically been positive in post-election years, where we see here the Dow Jones plus 0.5% for Q3, S&P 500 0.8%, NASDAQ 2.2%. So that's actually quite interesting to gather. Let's go into my third point that I pulled up. The Almanac also highlights a specific bearish pattern that traders can monitor, which has been a reliable indicator for potential short-term downside. That pattern is called the down Friday, down Monday. And this occurrence is when the market closes down on the first trading day of the week, which is a Monday, after closing down on the last trading day of the previous week, which was Friday. Historical impact? Well, from 1996 till May of last year, that pattern has occurred 94 times. And following that signal, the market has historically seen further downside. And in most recent data, as of 2024, it shows that after that event, the market experienced an average decline of 5% over an average of 33 days to reach a trough. So far, at least, that has not happened. Because yes, last Friday, which was the last day of July, the 31st, yes, things did end down, but the following Monday, things were up. At this moment, I took note of that and saw that this historical occurrence has not actually taken into effect as of yet. But what I will say, after pulling those insights away from August, I think it's important that we understand that August does have that reputation for weakness, but keep in mind that Q3 positive historical tendency for the quarter. So on a tactical level, keeping an eye out for like what is showing here with this occurrence of the down Fridays, down Monday. That's something to play in mind. But what I'm noticing is that August being a weak month, but yet we have Q3 being a positive quarter post-election. I see opportunity in that because if August is the weak month, it's going to open up opportunities to buy at discounted pricing, because we always say you never want to buy at a high. And we have history showing that August, the month of August, is referred to as a summer doldrum. It presents an opportunity for like buy and hold, or for those who are doing options trading and they can do a swing trade or a leap. It's not financial advice, but I'm just showing you the opportunity that's there when we see history showing that August does have low points in the market. So that's something that we can utilize when we do go back and do our research and see where we can buy prices at. And that's another thing that people have often come to me and asked. It's like, all right, well, what do I buy? When do I buy? Well, what do you buy? What I tell people is you buy quality companies that are actually needed. You want to think about certain devices that you use. Yes, everybody has an Apple phone. Why not invest in Apple? We're all using some kind of devices, whether it's a MacBook, your phone. Most people have vehicles. Chips are needed to operate these technologies. Look into the chip sector. When to buy, this is the exact example of when to buy. You want to be looking for these opportunities when the market is pulling back. So moving on to the seasonality chart, just to show where we're at right now with August. On average for QQQ, it's up 0.7%. Currently, we are at 1.69%. S&P 500 on average is down 0.21%. We are currently at 0.81% as of today. And then for the Dow Jones, August is on average negative 0.38%, and we're currently at 0.13%. And again, this is just from bar chart. Our current landscape of things, as I mentioned, we had the jobs report. And this article is just a few pieces from an article on CNN. So U.S. job growth stalls, just 73,000 jobs added in July with a stunning downward revisions to recent months. So we see here that the U.S. economy added just 73 jobs last month, and the monthly totals for May and June were revised down by a combined 258,000 jobs. This revision was very key and shook up the market for many reasons. Everybody's been wondering where this rate cut is coming from, why we're not getting a rate cut. Well, because we had data that was showing the job market was doing well, the economy is doing well. Well, that just got revised, and we see we actually weren't doing as well as we thought we were. Because now that we see that we weren't doing as well as we thought we were, that is more of a reason for the Fed to go back and be like, all right, cool. Now that we have this updated data that actually isn't as pretty as we thought it was, this is why we see below here where those traders are now expecting an 85% chance of a rate cut from the Federal Reserve in September, up from a 38% chance just that Thursday. And in more recent articles that I have come across, I've seen that jump up to a 90% chance of a rate cut coming in September. That is something that is definitely on my watch list. As we talk about watch lists, what's on the watch list for me that I'm paying attention to? Well, rate cuts. The rate cuts that is expectedly now, 90% chance, are coming in September. Jerome Powell, Fed chair, he's expected to speak on August 22nd at the Fed's annual Jackson Hole Symposium. The market likes when there are rate cuts, because that means these businesses, they can now borrow money at a lower interest rate versus what they can do right now at the moment. Other thing that I'm looking for or paying attention to for this month and moving forward, well, we recently had XRP versus the SEC. That case has formally closed. They closed their appeals, and that is a big win for XRP and the crypto space. It's a landmark case that deserves to be followed very closely, because we know in July we had the Genius Act that got signed into law. We still have the anti-CBDC bill, and then we also have the Clarity Act that's in Senate right now waiting for those to get signed into law. That has not been signed into law as of yet, but that is something to closely pay attention to. In line with the XRP and SEC case, I'm also looking at Coinbase. Why? Because Coinbase is where most people go to buy their crypto. Outside of that, we also know with the passing of the Genius Act, that served as a nice catalyst when it comes to the crypto space. Coinbase had also recently pulled back significantly. That is my company that I'm going to share with you. I'm going to show you the chart and see and let you guys see what I mean when I say it pulled back significantly. But yes, Coinbase is one of those companies that I missed earlier. I gave it away to a client of mine, and then they had an amazing return. I'm talking like 400% that I had actually missed out on because I was concerned about the Israel and Iran missiles going back and forth. I thought that was going to shake up the markets more than it actually did. But let's go further into what I was seeing here for Ripple. So these two screenshots are from an article on Ripple's website. And basically what it's showing here is that Ripple and Rail, just to start off with Rail is a company that essentially, you could think of them as a company that builds special high-tech cash registers for businesses. That's like a basic way of thinking of it. But now Ripple is joining forces with Rail, making it super easy for big businesses anywhere to pay each other using these new digital dollars. So the key takeaways from both of these articles, you guys can screenshot them. Again, you can access this straight on Ripple's website. But the ease of use is a key takeaway. Businesses can easily swap regular money for digital money and back again. It's simple. They can accept lots of different types of digital money all in one place. It's a one-stop shop. And then it's safe and secure. It's all done in a way that follows the rules and keeps the money safe. And basically, Ripple, after winning its case, is going to expand. It's going to build on what it's already been doing, and it's making it simpler and more reliable for businesses everywhere to start using money of the future. All right, so key takeaways. The catalyst, the disappointing jobs report, has fundamentally changed the game. The fears of a slowing economy have dramatically increased the odds of a Fed rate cut in September. Rate cuts are historically bullish for risk assets like stocks and crypto. The historical context of things, this new catalyst aligns perfectly with the Almanac's data, provides a clear reason why the market could follow its historical post-election year pattern. It reinforces the idea that any August weakness or summer doldrums that we mentioned could be short-lived and represent a significant buying opportunity. It provides the potential fuel for a strong rally into September, fulfilling the positive Q3 outlook for post-election years. The sector spotlight, we mentioned Coinbase, XRP, it's all part of crypto. While the macro environment improves, the crypto space is seeing its own bullish catalyst. In resolution of the XRP case, that removed a major regulatory cloud. And then we have the key crypto-related stocks like Coinbase. They're sitting at critical support levels, potentially poised to benefit from both that macro shift of the rate cuts and also the positive sector news as we await the other two crypto bills to get signed into law and see how that goes moving forward. And so what I'll do now, I'm going to share Coinbase, because that is a company I said that I'm looking at, and I'm going to show you why.
So here's what I see so far with Coinbase. We're looking at Coinbase right now in a monthly time frame. What I wanted to point out is that since November of 2024, we have had this area of resistance around the 302 level, 303 area. We see with these wicks. Each time we got here, we got pushed back below it. But it wasn't until June of this year that we cleanly broke through. With price action, what we typically see is once we break through an area of resistance, that old area of resistance becomes new support. And that is what we're seeing so far right now on the monthly channel. We also see a bullish indicator, or a bullish pattern, I should say, right here between these 3 months, March, April, and May. These 3 candles here have formed a morning star pattern. Morning star pattern includes the first candle being that bearish candle. This middle candle is a variation of a doji candle. We see buyers have stepped up. And then that third and final candle closed above this bearish candle, indicating or confirming that buyers were in control. And then we have this impulse candle that breaks through that resistance. And then we see here, we got into July, we were still pushing, and now we're here in August now, and it looks like we pulled back to retest what we have already broken through in June. And we can look even closer on the weekly channel. We see the past 2 weeks here. We had a nasty bearish candle here, but we still closed above that breakout level. Last week, we dropped below that monthly breakout level, but we had strong enough buyers to help push that price above that area. So far, these past 2 weeks, that monthly breakout level has become new support. So we have the catalyst to support, and also to mention in their earnings report, the CEO mentioned that the surge that we saw in the crypto space after the Genius Act was signed into law, that actually wasn't even accounted for in their most recent earnings report. Q2 showed declines in the trading volume, but since that Genius Act was passed, there was significant increase in the trading volume. So that is going to be reflected in Q3. And per the CEO, they are expecting Q3 subscriptions and revenue services to jump 8% quarter over quarter, driven by those higher average crypto prices and the stablecoin revenue. So that's what I've collected when it comes to the data that I'm seeing on Coinbase and why I have it very high on my watch list. I can see how this may just be a retest and we are about to bounce and go back to their all-time highs, which we see here. They got up as high as 444.65. We're currently at 310.54 cents. They have the catalyst. On the technical side, I do see a lot of bullish indicators, and that's why I have Coinbase right now pretty high on my watch list.
What you guys just saw there was an example of how I use support resistance to identify key areas when it comes to charting. You also saw within this presentation using bar chart as a tool to help guide and build a thesis for my decisions. If you guys are interested in more information and all the tools that I use, I'm actually going to be starting my Patreon this month. I'll make sure I'll leave the link in the description. And within that Patreon, you'll see all the charts that I'm currently charting. I'll always be posting in there what exactly it is that I'm looking at week by week. I'll also host a monthly live Q&A within my Patreon. So definitely check that out. And thank you for sticking around for this monthly breakdown. Looking forward to see how the rest of this month pans out. And you guys will be seeing me again next month on the next monthly breakdown or in the Patreon. You guys take care. Have a great week.